Did you see the market today? Phew. It was a hell of a roller coaster ride. If you were trading it today, bet you had your heart in your mouth. In any case, before we get into it, let's handle the legal side first. Today's Monday, March 14th, 2022, and right off. Let's just say, it was a hell of a roller coaster ride on Wall Street today. Cryptocurrencies were hit. Bitcoin now under $40,000. Precious metals felt some pressure too today, and the markets just kept up with the volatility that has been its nature in recent weeks. The S&P 500 lost 0.75%, while the Nasdaq lost over 2%. The Dow was the least of the losers today. After having quite some gain in the pre-market, it lost all of its 450 points gain during the course of the day. In any case, just before market close, it tried to pull itself slightly up, finishing just about flat. On the back of all these, U.S. crude fell under serious pressure, dropping to below $100 a barrel at some point today. Don't celebrate this just yet. Pullbacks of this nature are often very bullish, and whatever relief you may get from this will be short-lived. Before I go on, quick question: ever paid attention to the media on a trading day? If you don't, good for you. That's why you have us here, to save you some of that silly headache. Took 2 screenshots for you guys, just to show you how these guys try to play us daily. They seem to have sound bites for whatever happens in the markets. Check this one out. When the market was going up, they had a reason for it. To sound like experts who understand what's going on. Then look at this one. Same day, same freaking story. But the whole story's been changed. Look at the title change. What a switch. The story was suddenly about why the Dow lost all those points. These guys want to come off like they can give you reasons for what is happening. In truth, they do nothing. They just give us whatever propaganda they are instructed to do. Notice how they often have a crisis as excuse for a red day on Wall Street. And yet, some people think these stooges have integrity. Ridiculous. But on the markets, what really happened today? And how do we make sense of it? The UN warns of a threat of nuclear war. Of course, the markets didn't like that. I bet you don't like that too. The word nuclear is really thrown around to grab our emotions. This is coming on the back of the news from 2 days back, when Goldman Sachs revised their target for the S&P 500 for a second time in a month, expecting the S&P 500 to perform poorly this year. Okay. This is how we look at this thing. When folks like this say something, we think it best to take the opposite side of that trade. Remember when Ben Bernanke said in 2007 that the housing market wouldn't tank the whole economy? How did that turn out? Or when our dear Uncle Jerome, referring to Jerome Powell here, said in June last year that inflation was transitory. These never age well. If they say things are good, run. If they say the world is going to end, buy. Simply put, these guys don't have your best interest at heart. So you should always take what they say with a pinch of salt. Denzel Washington said if you don't listen to the news, you're uninformed. If you do, you're misinformed. So it remains critical to do your own research. Period. That's what we do on this channel. Look at the charts. This is the Dow chart. You see it is trading within the wedge pattern. Perfect timing. With the Fed meeting coming up tomorrow and the press conference on Wednesday, it is a perfect way to see a breakout will soon occur. It must break out of this pattern at some point. What way? Too early to say. We only keep watching. There's a lot of talk of rate hikes coming up. Certain people expect a crash if the Fed increases rates. We are taking the opposite position to that. A rate hike would be loved by the market. The market would rally, most likely, if it happens. Why? Let's explain. If you recall in November, what happened when we expected a rate hike from the Fed? It didn't come. The market dropped. The point is, pay attention to the news. Our economy is toast. We lose jobs daily. Gas prices are through the roof. Inflation is now over a 40-year high. There's bad news upon bad news. The market is only surviving on the Fed. The Fed is the line keeping the market up. Hence, the market needs to have a sense of the Fed being in control, or at least perceived to be in control. The so-called rate hikes, yes, we call it so-called, because it would be inconsequential, but would come off as the Fed trying to control inflation. Though the rate hike would do zilch to fix inflation, inflation is here to stay. Before I digress, the market needs to have a feel that the Fed has things under control, and the summer rate hike, which would be inconsequential, would be the Fed showing the market we are still in control, and that shoots the market up. Hence, if the Fed does not raise rates this week, we expect some serious drop in the Dow. A lot of YouTubers are on the opposite side of this logic. They want to point to the fundamentals of our economy. That model has not worked for over a decade now. The economy is toast. Gone are the days when the stock market was a reflection of the economy. Today, the stock market is a reflection of the Fed's monetary policy. Sounds silly, I know, but if you want to make some money for yourself, you can't do what everyone else is doing. This is not financial advice. Do your own research. But if you notice, we are yet to be wrong on this channel. We have studied how these people try to deceive the regular guys. So we lose their worthless fiat, and they make more of it. They told us that the last variant will crash the market. Yet all three indices made new highs. Jamie Dimon said Bitcoin is worthless, only to later say he was buying it for his clients. We won't be fooled anymore. Our bullish forecast still stands. The 10-year yield is now right above 2%. The market would love this. We're not worried if the 10-year yield hovers around here, nor if it drops. The worry is if it begins to spike uncontrollably. That would signal serious trouble in the debt market. And then, only then, will we run for the hills. So for now, we wait to see what happens this week. There should still be some volatility. The war in Russia is going on one end. The U.S. is warning China about supporting Russia. There's that uncertainty. Then you have the Fed meeting. So we honestly think it is best to hold off and just observe this market, at least till the press conference on Wednesday, with the Fed chair. Then we can have a good understanding of where the market is headed. We don't see ourselves as experts, but as observers, who seek the best trades for the most profit. And we have a feeling that's what you are. However, let's make something clear. This doesn't mean the market can't have pullbacks. Pullbacks are totally normal in a bullish market. Look at pullbacks as opportunities to increase your positions, not a reason to run. The market will not have that overwhelming crash everyone expects just yet. It must first happen in the debt market. So look before you leap. On pullbacks, get in, if you can. Take WTI, for example. It dropped to below $100 a barrel. It's a phenomenal opportunity to jump in. By the summer, we could be on $1.50 a barrel. That's a whooping 50% on your investment in just a few months. Not financial advice again, just saying. However, this doesn't mean it may not shed some more. That's markets for you, up and down. But we maintain that on this one, everything looks like it's going up. Don't fall for the fear trade trap. Be a bull. Take it on.
As we always say, it is best to keep it simple. And remember, stick to your risk management in this game. The old saying of the market continues to remain true: bulls make money, bears make money, pigs get slaughtered. Thank you so much for watching. Please, kindly consider subscribing. We release videos every U.S. market day, so please be at liberty to check out our other videos. It really means a lot to us. Thank you.